One of my favorite guests, Sanjay Poonen, is in the house. In a moment when most of the cloud stocks are going strong, I want to circle back to the one that has been a bit of a laggard. I'm talking about Cramer fave, VMware, the company that pioneered the virtualization software that makes data centers so powerful by letting a single server run multiple virtual machines. VMware is now a major player in the cloud infrastructure space, exposure to networking, hyper-converged systems, of course, the cloud. However, when the company reported roughly 6 weeks ago, even though the actual results were incredibly strong, management didn't raise guidance. Stock got clobbered. This was a $200 stock near the end of May. By last week, it pulled back to 161, though in recent sessions showed a sign of life, 172. And so is it time, I have to ask, to buy the Cloud King that is cheaper than I thought it would be? Can it get its groove back? Let's check in with Sanjay Poonen. He is VMware's Chief Operating Officer of Customer Operations to get a better sense of how his company is doing and where the whole cloud cohort is headed. Mr. Poonen, welcome back to Mad Money. Sanjay, have a seat. Good to see you.
Thank you, Jim.
All right, so let's clear things up immediately. Here, Morgan Stanley piece. First quarter 20 results, macro uncertainty keeps a lid on the fiscal year. JP Morgan, VMware acknowledges uncertainties in the macro, but bucks the trend with solid billings growth. To me, it just seems you're being conservative. This was a monster good quarter, maybe the best of the Cloud Kings.
Well, we had a great quarter, and you have to put the bigger picture in perspective. I think we're in the golden age of software. We're software defining everything. The software companies in general are doing well. What we have done as a company is focused on making the data center software driven, and we think there's a bright future there. Right. We showed some examples of that in hyperconverged, in networking, software-defined networking. We showed some incredible momentum with our partnerships in the hybrid cloud. Amazon's obviously first and preferred there. We also announced a partnership with Azure. We can get into that. And the digital workspace, which are all of the device. So we think our future is bright, and we just have to keep executing. Our view is always the long run.
Well, what I'm hearing is that just because one of your partners, obviously ownership stake, Dell, may have not had that great a quarter, we should necessarily read through that for VMware. That may be a mistaken correlation.
I think it's a little bit of a misperception that we should nip in the bud. First off, VMware business with Dell in these areas like hyperconverged, we've now surpassed companies like Nutanix, who are #1 in hyperconverged infrastructure. And in the digital workspace where we're partnering with Dell laptops, those are going very well, and we want Dell and VMware to do well together. But in the data center, we work with Dell, with HPE, with Cisco, with Lenovo. There is no one hardware player that's the majority of our business. In the cloud, we work with AWS, with Azure, with Google, with Alibaba, with IBM. You won't find another company that's got as many hybrid cloud partners. In the digital workspace, we work with Apple, with Google, with Microsoft. So in this software future, remember I said we're in the golden age of software?
Yes.
Okay? We're not tethered to one company. We're optimized for Dell, but not tethered to them. And you need a software-based solution for any of these areas, the data center, the cloud, or the digital workspace, during tough times and in good times.
Now, I understand. I may have misspoken last week. I was talking to some people at some major department stores, retailers, and they said, look, people are leaving Amazon because they don't want to compete, send money to their partner, Amazon, who's really their opponent when it comes to brick and mortar. You're in a position, it seems like that Amazon and you guys together offer such a good value proposition that I shouldn't think of it as enemy of Amazon, therefore not doing business. That is really a much more complex and maybe advantageous thing for many companies, including retailers, to use you and Amazon.
Yes, you should think about applications like mobile homes. They're going to move from the data center to the cloud on this freeway called VMware.
Okay.
Now, the mobile home could go to one cloud, may come back. VMware allows the data center to act like a public cloud. So we make the hardware data center look like Amazon. Okay. Now, if you are Amazon customer, and they have 35% market share, #1 in the market.
Deservedly, right? They're very
Absolutely,
good.
And they're our preferred and top partner. We can help customers, and we have many customers we've talked about that are now adopting that VMware cloud and AWS.
Right.
For those customers who said, we're not an Amazon shop. For example, we quoted Walmart in our announcement. They are using Azure. Right. They now have an option now because we announced a partnership with Azure. So there are some customers that are going to have some other clouds. It is a multi-cloud world. While AWS will be first and preferred for us, we want every customer that has VMware in the private cloud, but AWS, Azure, Google, IBM, Alibaba, those 5 are the top 5 hyperscalers. All of them have embraced VMware.
Well, that is fantastic, and that answers that second question. With 2 dependent on Amazon, clearly not, and we don't mind having a great relationship with Amazon. Now, Red Hat merged with IBM last week. I was concerned about the impact on VMware. They were actually surprisingly quite positive about VMware because Red Hat seems to like you.
Well, listen, IBM is a great partner of VMware. We love their services business. IBM Cloud has 2,000 plus customers. So we're going to partner really well with Ginny and the team. We compete with a small part of Red Hat's business in containers.
Right.
But 80% of Red Hat's business is Linux. Okay, a good part of their business, which is OpenShift and JBoss, is not doing so well.
Right.
But the future of containers, that's a small part of the business. We can walk and chew gum, which is we can partner with IBM and compete with that small part of Red Hat, and that's our focus. And we want a big tent at VMware. We want to partner with as many people as possible and compete with as few people as possible.
All right. Now, I love that. You are a man of your word. Where are we with China? Do I have to worry? You could tell me straight that, Jim, things are not where we want them to be.
Listen, first off, we have to abide by the laws of the land. So if the U.S. federal government asks us that we're not supposed to do business with certain companies, we will abide by that.
Okay.
We do have certain Chinese companies that depend on us, and we have a good business there and employees there. And we hope over the long term, these trade issues resolve themselves. But for right now, we're not seeing that impact our business, and we want to see ourselves. Software is a little less immune to some of these things the hardware guys have seen as it relates to China.
Okay, perfect. Now, you are always an inspiration to our viewers this weekend. On Twitter, you tweeted, and I immediately retweeted because it was so good, about 10 ways to create a customer-centric culture. I think that we forgot, in many ways, younger people are thinking, how do I serve my firm? How do I serve myself? They don't know how to serve the customer. Tell us something about what they should be reading and knowing.
Listen, I would definitely love to have everyone read that blog, but I'd pick just two areas that all of us could do. First off, if you want to serve your customers well, start by serving your employees. One of my professors at Harvard Business School, Len Schlesinger, wrote a blog on, an article and a book on service profit chain. And what he's talked about is if you want to create shareholder value, focus not just on customer satisfaction, but satisfied employees. Hug your stars. Take care of the best and brightest and come in there. And the second one is something that I think all of us can do, and you do very well in your show, which is make your story Sesame Street simple. All too often, I see product managers and account executives blabbering on with PowerPoints. Okay, let's tell this story like you're telling this story to your mother or to your kid.
Yes, this is what this shows. I used to tell my mom about all the stocks, and I would have to say, listen, it's a grocery store. Go feel the lettuce.
Exactly. And when we make this, and ironically, when you make things simple, you're going back to some of the basic principles of Stephen Covey, 7 Habits of Highly Effective People, or Dale Carnegie, How to Win Friends and Influence People. It's not that complicated.
Two that I swear by.
Have customer empathy.
Wow. Okay, that is Sanjay Poonen. I told you he's an inspiration. COO of VMware. I feel so much better. I am putting my money where my mouth is. I think my Chapel Trust has to buy the stock after our restrictions are through. That's how good this one sounds. Thank you so much, Sanjay.
Thank you, sir.
Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.